Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining me is Kinahan, chief market strategist at TD Ameritrade, with our monthly update on the investor movement index, just exactly how retail investors are approaching the market. And what was so interesting with January, and even argue going into February, I feel like for the first time, at least in the financial media cycle, we weren't focused exclusively on the pandemic, the election. There was actual real market stuff to focus on.
Absolutely, Jill. First of all, thanks for having me. Always a pleasure to be on with you. You had a change of power in D.C. and all the craziness that went on there. From the market point of view, you had earnings season and a lot of forward-looking things going on there. A little bit of craziness in the last week of the year in terms of social media driving some trading, maybe as some would say the true cross of fintech, if you will. So there was actually a lot of days where the pandemic or the vaccines were not the lead story in the market, which is quite a change from what we've seen overall for the last 9 months. And the one thing I would add to that, Joe, which I thought was the most interesting part of this report, is our clients kind of came out swinging, if you will, in 2021. They increased the IMX, the Investor Movement Index. It measures people who make at least one trade a month, equities, options, futures, etc. And they increased their exposure to the market by a factor of 10%. That is you and I talk every month. As you know, 1%, 2% up or down is pretty regular. 10% is a huge, huge move overall.
Yeah, it certainly is. When I saw that headline number, I did a double take as well. But I think what's really interesting were the buys that we saw, largely concentrated in semiconductors, and we saw some alternative energy companies in there as well. And that kind of is a sign of the times and where investors are putting their money to work.
Well, it's really sort of playing out as you and I talked today. What's interesting, the alternative energy, you see Brent crude overnight traded $60. You see West Texas crude down near 57.5. So these alternative energy sites, all of a sudden, with Plug being one of the top 5 stocks, all of a sudden becoming really, really interesting overall. And as you said, there were a lot of names that you and I talk about pretty regularly on the buy side. Apple, even at all-time highs, our clients are just pure believers in what they do. AT&T, again, appealing to a little bit of that dividend yield. AMD, a stock you and I have talked about quite a bit over the last year. And then the last one, which was driven a little bit more by our millennial clients, being Lemonade, the insurance provider. That's one we haven't really seen on the list before, Jill. And it made one of our top 5 stocks that people were exposed to last month. I found that one to be really interesting also.
Yeah, it certainly was. And on the sell side, I noticed a mixed bag.
Absolutely, but I would say the theme that I saw on the sell side is led by Moderna and Pfizer. And, very interesting to me that they come out with the vaccines, they do all this work. I think people were expecting some sort of a miracle move, maybe. They did okay, but it wasn't perhaps that explosive move that many thought they would have. And so I think a lot of people said, I've made a little bit of money here. I'm going to get out, because now what's the next thing that can actually instigate an up move in these stocks when they've kind of hit the pinnacle, if you will, in terms of what they're doing for society and for how many people actually need their product in the shorter term. And we see it reflecting in some of the earnings, how much this has made a difference in their revenue numbers overall, but didn't quite help the stocks break through as much as maybe people would have thought. And then the other one that was, hitting highs is Best Buy. And so very nice holiday season and all the numbers we saw, but people are like, okay, again, I think sort of a similar thing. Holidays are over. People have been working from home for 9 months, probably bought a lot of the technology certainly that they need. What's the next sort of stimulus to get people to go back there and to increase stock price?
I wonder if we saw some liquidating of assets and moving it into these highly traded names that we've been talking about for the past 2-3 weeks, or perhaps there was a rotation into digital assets as there's a crowd mentality there as well. It would be really curious to see just where this money went.
Yeah, it's interesting. I know everyone's probably right now, how can you not be talking about GameStop, AMC, and some of the other meme stocks? You have to remember, this is a month-long survey. So yes, did we see a pickup in those stocks in the last week of the month? Absolutely. But still not enough in that last month to make the overall survey move. Now, what it did do is move volatility overall in the overall market, which gives people a little bit of higher exposure in and of itself. Our clients were definitely active in those 2 stocks. AMC a bit more than GameStop. I think that's probably more a function of the price of the stock than anything else, because AMC's price never, drifted up into the hundreds and beyond, unlike GameStop's. But what I would say is our numbers show that it wasn't an all buy, everybody in. There was quite a bit of turnover in both of those stocks.
Right. And I think this plays into what TD Ameritrade is very well known for, is investor education. It's, it's great to make money and everyone should have the ability to do so, but understanding either the use case behind what you're buying or selling or trading is so key to keep a healthy representation and participation of retail investors to the market, because they are a critical component of it.
Yeah, Jill, the best thing that's happened over the last year, in my opinion, is people's interest in the market. But to your point, with that, we feel that, we want to make sure that they are educated on what they're getting into, as you said. And our education starts with 3 words: risk, risk, and risk. What are you risking in order to make what you feel is a reasonable return? It is one of the biggest mistakes that new traders or new investors, anybody new to the market, makes. Their first statement is, look how much I can make. And that's wonderful. Maybe your first statement should be, here's what I'm willing to risk for what I think I can reasonably make. And when you start with that point of view, as anybody who's been experienced in the market does, I think it helps you longer term. The beautiful thing about the market, 2 things I love every day: it's different every day, and it humbles you every single day. So starting with a risk-first mentality, and that's where our education starts with, really does help you understand perhaps how to approach these a little bit better for your own personal situation.
That's some of the best advice that we've had on the show, JJ. Thank you, as always, for joining us on Trade Talks, and thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.